All right, we are looking at ticker symbol KRT, Karat Packaging. Just monster. Like you guys can see my screen, money flow is bounced up and it's going up and to the right. That's great. Momentum is just a rocket ship, just boom. You can see it went from 12 now to $19. And the strength is just getting started. So technical wise, this is a monster. I normally don't like trading stocks that haven't been around for more than 10 years. So you must ask yourself, okay, Ryan, what was the exception? Well, let me show you. So the exception, just I am still in awe. Like I just purchased 1,000 shares in my retirement account at $17.63. It was not a Robinhood purchase, so I didn't really announce it on my uh, community page. If you guys do want me to announce like what I buy in my other accounts, let me know. But normally, if I'm buying in my Robinhood account first, I'll usually add in my other accounts if the stock is just a beast. So I've done that with AEY. I've done that with KRT. I should be doing it for Honda Motor Corp. But I'm more attracted to these these beautiful rockets that are just very volatile. So I think I should add Honda Motor Corp because historically speaking, it's at a great price. So that might be my next buy. But we're on KRT now. I'm sorry for the interruption. So just looking here, we can tell it's undervalued based off of the FinViz data, which I don't like to rely on FinViz data. So let's pull out my handy dandy calculator. So the company is profitable. So they make 413 million point three in sales plus 26 million in income. We're not adding market cap because it's under 1 billion, which is insane. This is another example of a company creating more sales than income, which is bonkers. So we're going to go add cash, remove debt. Total cash is 16 million plus 16 point, what was it? 04. Total debt, sorry, is 42, so minus 42.52. All right. And before we go back up, let's just look at total assets, 252 to total liabilities, 110. So the asset to liability ratio is over 2, meaning the assets is twice the liabilities, which is great. So that's awesome. Look at their cash. They just, from 2020 to 2021 to 2022, this is insane. Like this is beyond like comprehension. This, like, I know it's not a lot of money, but from 2020 having 450,000 to now having 16 million, this reminds me of Kira Sushi. Let me blow your brains. No, sorry, I'll try and take that off if I remember. That's weird. Let me blow your brains. Let me blow your mind is what I meant to say. So, did this just do a split? Oh my God, they just did a, no. Did they just do a split? Their stock was literally at $100. Is this Kira Sushi? Oh, this is Kira Oncology. I apologize. Where's Kira Sushi? Here it is. Oh my gosh, I'm all over the place. Okay, Kira Sushi. Let me blow your mind. This is a $100 stock. Let me show you where they went from to where they are now. Look at this. 2020, $460,000. 2021, $40 million. 2022, $35 million. This is insane. KRT, they're halfway to what Kira Sushi was. So am I saying, should this be a $50 stock? I'm not saying anything because that would be speculation. Look at this. This is just insane. So this is just for perspective. Um, so yeah. Uh, Kira Sushi literally went from $9 to over $100. Karat Packaging down to $12 up to who knows how much. But I haven't even got to the good part about this stock. So, um, okay, their cash has exploded exponentially. Let's go to the income. Look at their revenue. 2017 was 140 mil, 2018 175 mil, 2019 224, 2020 was 295, 364 in 2021, 422 in 2022. The trailing 12 months, we're at 433. So what does that mean? We are 7 months into 2023 and they're at 413. We have 4.5 more months left. What are they going to be at? Who knows? But look at their profits as well. 41 mil, 6 years ago to now 135 mil. That's insane. That is just like, oh my God. Their net income, look at this net income. It is so, so beautiful. It is so consistent. Whoever is running this company and running these books, bravo. Like this is spotless. Um, this is just amazing. And then we have over here, they're not diluting. Well, they might be, unless someone just sold a big position here. Shares outstanding have been around 19.7 million for about several years. But the shares float is 5 million. So that means the shares that are available for people like you and institutions to buy is only 5 million. Look at the sales explode. I know we already looked at it, but look at this beautiful stair step. Look at this EPS monster growth. And if we look at Kara Sushi, I mean, it's cool. It's not as attractive. And look at KRT. Oh my God. Like, I just dropped 17K to buy 17,600 to buy 1,000 shares of this. And I'm already up, I don't know. It's 1911. So 148. What am I doing? 17.63 divided by 19. I think I did it backwards. I'm up a little bit already, and I think it's going to go further. And I just messed up my numbers. So what I have to do is the 413.3 million. Sorry, guys. Plus 26 mil. Add cash, remove debt. So cash was 16, so plus 16.04. And the debt was like minus 42.52. All right, and then divide this by the shares available, which is divided by 5.71. This is a $72 stock. So you can see why I'm goo goo gaga for this one. I don't have a really good way to measure the gauge for institutional investors because what I normally do is I go to Fintel and I'd go here, KRT. And I think KRT is so new that they don't have it listed here. And if I try and look, Karat Packaging. Institutional ownership. Yeah. There's nothing here. And then if I go to Whale Wisdom. Let me log in. All right. Okay, so now KRT, Karat. See, it doesn't even have it here. Karat. Oh, there it is. Okay. Because I know Fintel pulls from the SEC reports, so I don't know if this does the same thing. Let's see. Oh, it has a dividend. So I did receive a dividend from it, and I was like, oh, this is nice. But it doesn't, FinViz does not have a dividend here, so I think the FinViz data is probably messed up. Because it does have it here. So it does have a dividend yield of 2%. Okay. And then going down here, we have, you guys can see this kinda, yeah. So basically, this green line is funds holding has increased. Okay, and then volume, whatever. So this does have somewhat up-to-the-date data. Let's see, funds holding is at 45. Hedge fund 16, 13F shares is at 4.29 million. That's good. Hedge funds 1.7 million. That's good. Percent ownership is down to 21.5 for 13Fs. And then hedge funds are at 18.86. So a little increase there. New positions up 300% for hedge funds, or I'm sorry, for institutions, and then up 300% for hedge funds. That's cool. Closed positions, more reduced positions. Okay, so let's just see who are the new buyers here. But date reported. So 714 Vanguard purchased some. That's cool. Ronald Blue, don't know who you are. Putnam sold 86,000 shares. And Cora bought 24,000. Millennium bought 11,000. BlackRock should be in here somewhere if Vanguard's in here. Morgan Stanley purchased. Ensign sold a bit. Let's see if we can get all of them. If Vanguard is doing something, BlackRock is usually doing something. So let's see. Black. There's BlackRock. So BlackRock sold, and they haven't bought in. So Vanguard still actually owns quite a bit of shares. So they sold 8,000 shares, but they still own 300 and some thousand. So I guess Vanguard purchased, or BlackRock purchased before BlackRock. BlackRock purchased before Vanguard. So that's pretty cool. I think I should just email FinViz and be like, hey, you guys aren't showing their dividend. And then I should email this company here and be like, hey, you guys aren't showing their data. But I'm not that guy. So anyway, this is Karat Packaging. I've added here. Do I think this could go quite high? Yes, I do. And then I also see Elliott Wave as well. So Elliott Wave is 1, 2, 3, ABC. So here's the 1. Here is the, stop. Here's the 2. And the 3 is usually twice the 2. So we should see probably something like this. It's going this way. So something like this times 2. I mean, could it get... I have the stock going to 72, so I'm going to keep holding this. If it goes down to 10 or 12, I'm buying, obviously. As are the insiders. Look at this, you guys. So Wang sold, the COO sold 12,000 shares. Like if we look at all of these sales and we look at all these buys, the buys dwarf the sells for sure. We have Marvin Chang, or Chang Marvin, selling quite a bit, but then we have him buying again, or her. So that's a good thing. They sold at 18 and they rebought at 13. So obviously, you know, I'll let you make your own. I'll let you draw your own conclusions. Look at the CEO buys, you guys. The CEO owns 7.4 million shares. This is what you want to see. You want to see a CEO buying. You want to see a CEO holding. We don't see any CEO selling down here. So, And this goes all the way back to last year. So again, I just think this one is poised for beauty. And if we look at the quarterly here, we should be looking for, okay, quarterly revenue of about 90, I got 95 million last quarter. Okay, we want, so they actually did less. So 2022, they did 105, 2023, they did 95. So we want to, they did 110, I'm sorry. September 2021, they did 102. September 2022, they did 110. So September of 2023, we want to see, I'm sorry, I'm going to backtrack again. I apologize. The next reporting period is going to be this summer. So when are they reporting? They reported in May. Okay. So again, it hasn't been updated here. Okay, so in May they reported Q1. So we haven't seen Q2 report yet. So for Q2, we want to see, they did 94 mil last time in 2021. 2022, they did 114. So that's a 10 million, 20 million increase in a quarter. If they hit 134, that would be monstrous. So 2021 Q2, they did 94. 2022 Q2, they did 114. Q2 2023, they should hit 134. That is huge if they do. Do they release guidance? I don't know. I don't want to dig into it too much. I mean, we've already done so much for this one. Gosh, let's just do it. Okay. Let's just see. Okay, so sales for the first half of 2023 expected to be lower. Okay, so the first half, so that includes Q2. So 134 million is probably not going to happen. Okay, I'm just going to try and get to the meat of this. As a reminder, revenue for the first half of 23 is expected to be lower than the same period last year when pricing for inventory sold was at peak level. So they're scaling back manufacturing production in California while increasing import items, focusing on higher margin products. During the last few months, we have significantly changed our sourcing network in Asia. Okay. Okay, so we could see some headwinds. We'll probably see some headwinds here. All right, and they're making investments into their company. So they declared a special dividend of 35 cents per share. So yeah, that's insane. Okay, moving further in 23, we're forecasting revenue for second quarter to be down about 5%. Okay, so let's go back here. So second quarter revenue to be down 5%. So if we go back to second quarter last year of 114, so 114.88 times 0.05. So 114 minus 6. So 108 million, that's still a lot. So, okay. At the gross margin level, we believe gross margin first quarter is exceptionally high and is not indicative. Okay. So what was their gross margin for the first quarter here? 50%, around 50% almost. Like it's pretty high. 57.66 divided by 60%. So basically to make $100, they paid $40, I think. Yeah. I think, and they made 60 on top. So let's go on. Okay, first, this is good. They put the questions in here, so I think okay, so basically 32, 38%. That's still really good. That's a high growth company margins, by the way. Anything over 30, 25, 30%. Uh, dude, this is gonna be a billion-dollar company. I'm calling it now. Uh, they're just expanding. They're adding more products. Gosh. I think our level of confidence is pretty high. That comes from a couple of things. They already signed some new warehouses, getting ready to move in towards around some of the warehouses in the second quarter or towards the end of the second quarter. So we know it's coming along, and we're also adding, now it's point, racking spaces in some of these warehouses. So the infrastructure is going to be ready pretty soon here. I will point out, I think we touched on this in some of our discussions as well. A big chunk of our business, we do have great visibility into our volume, is going to be from our pipeline, right? So some of the new contracts that we previously signed that were sitting in our pipeline, we know we're going to start shipping towards the end of second quarter. So third quarter should be nice. Gives us a lot of comfort, a lot of confidence. That's great. Pulling out the help. Oh, okay. Oh, in Taiwan or something. Does that mean how much does it hurt your ability to go eco-friendly? All right, just talking about their products. Um, oh yeah. Damn, look at the CEO. Ryan says, first one for me, as you've taken price down pretty aggressively, do you feel you've been able to gain market share versus some of your competitors? The CEO just says, yes. Yes. As we think about the sales team and ramp up here in the second half, how long does it typically take you new sales rep up to speed, add new customers? How should we think about the investments you guys are making in sales right now? Well, right now we're looking for experienced sales staff, with our competitors looking to scale back up in terms of operations with demand scaling back. So basically we're able to pick up new sales reps. People are looking for a new job, and we're actually picking up people in a similar industry. That's good. That's good. Giving a lot of authority to sales rep to go out and flexible term selling. Takes a couple of months for sales staff to bring revenue in. That's great. We added the warehouse in Chicago. Do you feel like it'll be a... Our lease is up in Seattle. Okay, we've already negotiated double space. Okay, Stifle. I'm not sure who Ryan Hoffman is. but this is Michael. That's funny. Uh, got him. The operator introduced him as Ryan when it's Michael. So you're absolutely right. So the rest of your week, so funny. Okay, freight and comparing 2Q through Q4, it was during what? Um, wow, allergies. Okay, so they're writing off the inventory. All right, talking about efficiencies. Oh, you guys. Michael just got the CEO to confirm that they are downplaying the heck out of the stock. So what Alan is doing, the CEO is saying, okay, it's going to be pretty light year. It's going to, we're going to see some stuff go down. Michael's saying, well, based off these numbers, you're being a little conservative, aren't you? And he's like, we could say there's more room for upside than there is downside, right? Come on, Alan. Tell me, the CEO, come on. You're just really downplaying this. And the CEO says, there is a lot of room, I can say. There is a lot of room. Yes, a lot. All right. Okay. Mergers and acquisitions. Okay, saying it's not worth the buying. Da, da, da. Maybe 2 years ago. Okay. A lot of Ryans on this. Okay. All right. I think I'm boring you guys to tears. No further questions. Bye-bye. Okay. That was a really good, really cool. So the CEO is downplaying. However, we should anticipate some softer revenue for the next reporting period, which is fine. But I'm very excited about the stock. I own 1,000 shares in my retirement, and I own, gosh, how much do I own on Robinhood now? I know I've announced it. Every time I make a buy on Robinhood, I announce it on my YouTube studio, my YouTube community, sorry. So KRT, I own 17 shares, which is $321 in market value. And I'm up $61 on that. Wow. So I'm going to hold the heck out of this one. So far we've gone over AUI, Honda Motor Corp, KRT. The next one, I just closed out of it. The next one is Play Studios and then Vizio. Let's go ahead and jump on.